All right, folks, so for today's video, we're going to be going over one of my biggest trades of 2025. And if you're familiar with our common practices here on our channel, we're going to share with you our live trade entries and break down the strategy so that way you can see how this unfolded in a live market environment. And thereby you could decide for yourself if this is a type of trading approach you might want to incorporate into your trading. And what I love about this approach is that it can be applied regardless of your trading style, whether you're a scalper, intraday trader, or swing trader. But more importantly, we're going to keep it simple to show you that you can make money in these markets by following basic entry-level trading concepts. If you enjoyed today's video and gained value, like and subscribe. If you have any questions or need help, feel free to comment down below. You can also reach me more directly either via email or Telegram. You can access my official contact information down below in the video description. While you're down there, be sure to check out our valuable trading resources provided, ranging from links to free demo accounts, brokers, and prop firms that I personally use for trading gold markets, information of our signals so you can follow and copy my own personal trades, automation, mentorship, trading community, much more. Again, all of that can be found down below. All right, so our main point of interest for this particular setup were a couple of buy entries that we had taken between 28.78 and 28.80. And as you'll see in a moment, we had a stop loss here set at 28.70 with a personal take profit target set at 29.28. I'll explain more in detail in a moment why I targeted this level. So with our risk and take profit targets, we're looking at a 1-to-5 risk reward ratio, meaning we're risking 1 to make 5. Now, the most important question we're going to answer is, why do we take this trade? Something we talk about in a lot of our videos, because if you can't answer that question, then you shouldn't be taking the trade. If we look at the immediate short-term trend, we can see price is trending downward. So why do we take a buy in this area of the market if the price is trending down? This is where understanding just basic entry-level trading concepts can be extremely beneficial to give yourself an idea of what price could do from certain points. When we look at this from a higher time frame, again, the immediate short-term trend is bearish, but the overall trend is bullish. And if we were to add a trend line connecting these points from the start of the bull run, we have ourselves 1, 2, 3 touches. So taking this at a closer look, this little run up here is a result of price respecting this major trend line. But what else can we see? When we look to the left, we have a major key level that served as resistance here, broke above, then served as support to break below, retest our major trend line, come back, pierce our key level, and price is now what? Retesting this key level as support once again. So in terms of answering the question, why do we go for buys? Plain and simple, we have price respecting a key trend line followed by a retest off of a support level. Generally speaking, when we're looking for buys and sells, we buy at levels of support, we sell at levels of resistance. And this is something we go into more details in our market structure video. While it's ideal to buy and sell at levels of support and resistance, when you get a break and retest of a certain zone, these can serve as added confirmations that price is most likely going to respect those zones and continue in that direction. So when we come down to our smaller entry for our trade execution, we can see a better picture of our key level serving as multiple forms of support, resistance, and then again, breaking through that key level to retest as support. Now from here, you can argue this is more than enough reason to enter for a buy, but as many of you know from my previous videos, there's one other factor I love to look out for whenever possible, and that is pulling up the RSI for potential divergences. And in this case, we have a divergence where the market is creating an opposite form of structure of higher lows, but in that same region, the RSI is creating a series of lower lows. This is a prime example of bullish divergence. And when you have a divergence complemented by a key level, this is to be considered a very strong confluence. Now, as something that I like to do in a lot of my videos, I also want to point out that this is also a trade setup that I called for our students and members within our VIP. This is to show you that these are not random setups that are cherry-picked in the markets to show you how a certain strategy works. This is to show you that not only are these trades that I personally take, but that I also share for our students and members so that they can benefit and profit from as well. As you can see, from the timestamp, this was sent at 3:05 p.m. Eastern time, which is 15:05 GMT, which you can confirm here on TradingView. We called out this signal in this area of the market to buy at 2880 with a stop loss set at 2870, which is what we have here, for a take profit target of over 200 pips. Personally, and as you'll be able to confirm from the footage, I had a take profit target at a much higher level of 2928, because when we look at this from a higher time frame, our nearest key level was in this region, which if we look to the left is a significant level that served as resistance and support. And if we were to drag this to the left, we can see that it served as support here, support, and resistance. Since there's no telling how far price could go or whether or not price is going to either respect or blow through a certain key level, this is why I set my own personal take profit at 2928. And as the trade played out, our take profit target was hit for nearly 500 pip move, capitalizing just under 40K. One thing I didn't realize until after the fact, and why our entry and take profit target made sense, is we had an inverted head and shoulders. So with the regular head and shoulders, you have a peak, is referred to as a shoulder, we have the head, and then another shoulder, and then we have the neckline. This is a regular head and shoulders. What we have here is an inverted or upside down head and shoulders. Generally speaking, the way that you trade a head and shoulders, you wait for price to break below the neckline, which in a regular head and shoulders is a level of support. In an inverted head and shoulders, we wait for the price to break the neckline, which in this case was a level of resistance. And notice how this level of resistance aligns perfectly with our major key level that we had marked up in this region. So where we were identifying a break and retest of a key level of support was also a break and retest of the neckline of the inverted head and shoulders. Now, when it comes to head and shoulders, a very common way that you can measure your projected target ranges, you take a measuring tool and you start from the peak of the head, drag it to the neckline, and you can see how this lines up almost perfectly with our take profit target of 2928. So again, this is something I didn't realize until after the fact. I didn't come into this trade knowing that I was trading an inverted head and shoulders, but it's just really cool to see that after everything we've identified, we also had a head and shoulders pattern, further confirming our general bias of buying in this point of the market. Now, I understand that might be a lot for some of you, so let's try to break this down in a few simple steps to show you the process of my trading approach for this position. Step 1, we identified a major trend, identifying that we were in an uptrend. Step 2, we look for a level of support resistance for our buys or sells. In this case, a level where price had broken and retested a level of support. Step 3, we used the RSI to identify a bullish divergence, which complemented our support zone and our point of interest, all the while without realizing that we were also trading or about to trade the breakout of an inverse head and shoulders. We took our entry, aimed at a key level for our target, resulting in a profitable 1-to-5 risk reward ratio, capitalizing over 500 pips. And not to mention, this is a prime example of a sniper entry where from our point of entry, price came up, retested our point of entry or our support once again before continuing up, where price never came into our drawdown zone. Now, one thing I want you to take note from, this was more classified as a swing trade because of the fact that we held this trade for more than a day. But I want you to pay close attention to the fact that every single concept we talked about is something that we talk about in a lot of our prior videos for intraday and scalping to show you that these concepts can be applied regardless of your trading style. As a beginner or someone who is still trying to fine-tune their skills, there's an overwhelming amount of information out there on institutional concepts and, some trading concepts that might just seem a bit more advanced. And again, the whole purpose here, folks, is to show you that by keeping things simple, all we did was identify trends, support and resistance, and we used an indicator as an added confluence and also identified a pattern, which in this case was the head and shoulders, to identify a profitable position. Are those advanced trading concepts helpful? Absolutely. But this is to show you that you can be a profitable trader and make money in these markets by keeping things simple. This is one of the many things we talk about in our trading community. I hope you gain value from this video. Let us know your thoughts on this trading approach by commenting down below. And if you have any recommendations of future videos that you want us to do, let us know, drop a comment.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.